Okay, folks, good morning and welcome to Swing Trading Today. This is Bob Desmond, and it is 5 a.m. Eastern Standard Time, the 4th of March. So yesterday, we had the Federal Reserve cut rates. I said the other day that it was a mistake to do that in advance of some sort of a transitioning of the narrative from concern with regard to the coronavirus, which I said the other day I think is being overblown. Every day that goes by, I continue to think that it's becoming more and more overblown, and that there's something far more nefarious afoot. And I suggested, not that they would listen, suggested that the Federal Reserve not cut rates until the emotions of the disease die down and wait until traders, people, the public are focused more on economics. But they reacted, they blinked, and the market called BS. So the question becomes next, where to from here? What will the Federal Reserve do? And the question is, they're going to have to go, the answer is that they're going to have to go a lot bigger than what they're doing right now. Rate cuts are not going to do it. We're talking fiscal stimulus, more rate cuts, and it's going to have a diminishing return as we move forward. This is not the economy of 2008. 2009, 2010, when we had all the QEs. That's over. It's done with. It's pushing a boulder up a hill now, and it's going to be very, very difficult to push this market to all-time highs. They will try, and I won't say that they won't succeed, because I don't know what I don't know about what's in their toolbox and what coordinated measures global central banks can put together and make miracles happen. But the longer it takes for this all to unwind, the worse it's going to be. So let's get to the headlines. There's not much out there. I mean, the headline is, that's dominating right now is Biden apparently dominated the Super Tuesday with Bernie coming in second and Mike Bloomberg, for all the money he spent, winning American Samoa. So I didn't watch it. I think that they're all, with the exception of Biden on foreign policy only, Biden on foreign policy, security, and Bloomberg to a certain extent. There's nothing that they say that I can listen to. It's just so childish. So very very sad times in terms of what we're looking forward to in terms of leadership. Let's get to the futures. All right, I want to kick things off with the bond market. We opened up a short position on the bond market the other day. We didn't lean into it yesterday. I'm looking for a double top and a breakdown on treasuries. And you could see that we were putting in, let's go to a 4-hour chart here. And we still are putting in on RSI lower highs, despite the fact we're putting in higher highs on price. This is unsustainable. There's something wrong. So we'll be looking to lean into the short side of the Treasury market. Now, the downside is that you've had the Federal Reserve cut rates Now you're going to see yields rise. Talking about a kick in the you know what. We also last night after hours began short operations on China. And I went into the reason last night on Market Wrap. So we're going to be looking to build here more aggressively in the coming day and days. So I wouldn't go jumping in with both feet right now. And I would be looking for an opportunity, a intraday bullish key reversal. We're looking for a retest of weekly support. And we'll go leaning into further the short side of China. And one of the key reasons is simply this. Ground zero for trade, Port of Long Beach warns of shipping slump from China. That had to be expected. It had to be expected. Moving on to the US dollar. This is a bear flag setup that I began annotating yesterday, and now we are trading down below the lower band of that support level. So what does that mean? It means that we should see a bid under commodities. They may be down in the pre-market. I know the futures are up, but it looks as though the dollar is going to flash a continuation breakdown. Let's take a look at gold. Yeah, gold was lower. I woke up in the middle of the night. I checked my quote. It was lower. It's come off the lows of the session. And I think that traders yesterday finally began waking up to the fact that gold, silver, the miners are the place to be. So what we're looking at here on the gold mining, oh, gold on gold, sorry, still too early. On gold is the potential for an inverted head and shoulder setup on a 4-hour basis. So left shoulder, head, note the higher low, head, right shoulder, and here's the neckline. We were rejected at that neckline yesterday. We continue to build a long position in the gold miners. We did so last week. We did so more yesterday. And we will continue to do so because at some point in time, you're going to see a rip as the dollar continues to weaken. Let's take a look at silver. Silver recaptured support. Beautiful. This is strength, folks. We had broken down last week through two key critical support levels. What did we do? We bounced right back and recaptured them. This is strength. And we're up right now by just shy of a half percentage point. And this is where everyone should be looking. If you're not, you're fighting the last bull market. Or you're playing the last bull market, not fighting it. Let's take a look at, before we go to the stocks, I want to take a look at first Bitcoin, then we'll go to commodities. All right, Bitcoin was breaking out or had broken out. It appears as though we are testing support now. We're flirting with a breakdown again. But this bar just opened up 9 minutes ago here. It's difficult to see, but we're trading down below this red line here. Let's watch for a bounce back. Way too early to make this call that we've seen a breakdown. oil and nat gas, and then we'll move over to the stock market. All right, so oil up 1.6%, putting in a higher low. Here, we'll just do this. Keep it simple. Looks as though we're already breaking out here. Yeah, we're already breaking out. So here's our tripwire. And if we close above this tripwire, this line in yellow, we're rallying up to $49 per barrel on light sweet crude, not Brent, but light sweet crude. And take note of your RSI, higher lows, good stuff. So oil looking good. Nat gas. A similar setup here, not as pronounced, but similar as what we're seeing with oil. Higher low. And we are, let's use this as a higher level. We are beginning to break out. So nat gas looking good. Beginning to look good. I shouldn't say looking good. We're still down and we haven't broken out fully yet. All right, let's take a look at the stock market. All right, S&P is up 2%. Let's clean this all up. So what we're looking for here is a resolution. And keep in mind that we are now in day 4 of March, and there's something bullish out there, and I spoke about it over the weekend, and it's what we should be looking for, and I mentioned it on Monday night as well, that we don't have a new monthly low yet on the markets, despite the fact that this market is under dramatic change, dramatic, I don't know, what's the word, just so many emotions, so many unknowns out there that are influencing the market. Yet we haven't broken down to a new monthly low. If you take a look at a daily chart, look at all this volatility, dramatic volatility. So the question now becomes, do we break out or do we break down? I believe that if we break down below this lower band of support here, we are taking out the monthly lows. If we break out, then the Federal Reserve may have pulled a rabbit out of the hat for the very, very short term. Remember, the rate cuts that they've already put into place, they have not impacted the economy yet. The rate cuts instituted yesterday won't impact the economy for another 6 months. Jorge's Tommy Hermano. How you doing, brother? Did you change your name? Did you always have Jorge's on there? I don't know if I'm pronouncing that correctly. Wasn't it Tommy Hermano one time? Hermanto is actually the way to pronounce it. Sometimes people change their names. So S&P is looking interesting today. Watch for a break below 29.77. If we break and close below there, sounds good, Tommy. Thank you. If we break and close down below there, say goodnight, Agnes. I mean, major problems. Let's look at the Russell, the small caps. You know, it's all similar. Here. So we broke out of a 4-hour downtrend. Now we're looking for a continuation move higher. Yes, I'm being anal. Sorry, folks. All right. Okay, better. All right, so it looks as though we're going to flirt or at least challenge the 1525 mark on the Russell E minis. RSI looking good. The one thing I would say and caution, and I don't care if you're a member, not a member, I just don't like to see people lose money, is please, despite the fact that we have these futures that are bright green, you know, don't chase this market. Let the market settle down in the morning. More often than not, you're being lured in. We're being lured in an effort to try to get us excited. We're buying the bottom. They're going to have the morons on the financial news media talking about EBITDA this and forward-looking guidance that, and the Fed's got you back. The other thing, you know, don't listen to them. They have no idea what they're talking about. All these guys do, they're long-only fund managers. They're one-trick ponies. They have to buy stocks. They can only hold X amount in cash. And they can't short stocks. So what else are they going to say on CNBC? What else are they going to say? They got to get you excited. And think about it. You have Goldman Sachs, Morgan Stanley, all these guys moving into the small client wealth advisory business. You know, these guys years ago wouldn't touch an account less than $1 million at a minimum. Now they're looking for the small accounts because they can't make anything on loans. So they want you in the market. They want you playing with the market. They generate commissions, fees. Look at Goldman Sachs now. They're in the credit card business with Marcus. All right, so the NASDAQ, very similar to the small caps, to the large caps. Higher lows here. Are we going to break out? I don't know. I'm not that smart. When we break out, then we'll decide what we want to do next. But right now, all I want to do is sit back, watch how this market plays out. Do we close out the morning above, we'll keep it simple, above the green line or below the red line? If we close down below the red line, in all probability, we're taking out last month's lows. And that will not be a pretty event. My alert's set for the NASDAQ. I want to take a quick look at, first a quick peek at gold. Yeah, a lot of volatility this morning in gold. I want to take a quick peek at food prices. I think that all the Federal Reserve did yesterday was stoke the flames of inflation. So you have pork prices over in China on the rise, food prices in general. So I want to take a look at, this is cattle. Cattle's broken out in the 4-hour chart. It was oversold. We're pulling back to do a retest now of support. Let's go to soybeans, of which the Chinese purchase a tremendous amount of. And you're seeing a rise here on soybean prices. This is a weekly view. We had broken out back in December and failed to hold in January, but it looks as though we're going to make another run at those resistance levels yet again. Corn, yeah, look at this. Corn is flashing very close to an outside reversal week. So just to recap, I'm concerned about inflation, folks. I think the only success that the Federal Reserve has seen so far, achieved so far, is the fact that they are stoking the flames of inflation. We have higher lows on a weekly basis. Once we begin to break out and above, let's call it 402.51 on corn, we have the makings of a breakout on a weekly basis. And there go your food prices. Cattle moving up, soybeans moving up, corn moving up. We're still in the very early stages here. Wheat's already begun to move up. And this is why we're watching the commodity plays. I think the Google stories, Amazon stories, they are the last bull market. And it's going to be commodities that are going to be the new bull market. And we're in the very early stages here. So stay tuned for more. I want to go to Las Vegas Sands. we're watching Las Vegas Sands. This is a monthly chart. We're flirting with the lower band of support on a monthly basis. A lot of damage done here. They do have operations over in Macau. Yeah, we have to avoid this. Here's the weekly chart. We saw a continuation move lower yesterday. All right, so we're going lower here. I wouldn't short it, but I wouldn't buy it either. Virgin Galactic. I keep going to the monthly chart. There's hardly any data there. I'll learn eventually. All right, so I think it's setting up here on Virgin Galactic. I know that there's a lot of interest in Virgin Galactic, and I get it. I get the why behind it. I really do. But what I'd be looking for here is, or are, I should say, are two things, or one of two things. Ideally both. Let's go with number one. Number one is we pull back, we do a retest of this weekly support level at around $20 a share. And we nibble there with a stop right below. If I don't make notes to myself, I forget. Let's keep this active. It's a weekly chart. I want to keep this active for about 2 weeks. Let's see if we get a sell-off and an overshoot to the downside. If we hold support here, I would think about not leaning into the short side. I would think about opening up a small opening position and then adding more on a breakout above this upper band of resistance. And again, we'll keep this active for a few days. So set it and forget it. I don't care about this stock until such time as it either A, touches support, and or B, breaks out above this upper band of resistance. Daily chart. See if there's anything else that can influence me? No. Well, here's the lower band of the rising weekly uptrend channel here. We held it yesterday, but this is a market of extremes. So we want to buy the extremes. That way we have a logical support level below where we know that if we close down below it, we need to stop out. So more to come on Virgin, Square. I keep bringing up this lady who I'm obsessed with, who was on CNBC a week ago yesterday, and she suggested that you buy Square, but she also suggested that you pull forward your dollar cost averaging. That was last Tuesday. Think about if you did that, took her advice, where you would be. And I keep bringing it up. People probably discuss with me hearing about us saying it, but it's just a perfect example of incompetence. The dollar cost average to manage your risk. What she's suggesting is you buy into an extremely expensive market and forego your dollar cost averaging. But she also, to her credit, I don't want to just bash her, she also suggested that you buy Square. There we go. And Square on a monthly basis is looking pretty good. I have to say it. Were it not for her moronic comment about pulling forward your dollar cost averaging, I never would have remembered Square. So we broke out in February, inside month thus far. Would I buy it yet? Probably not. But let's look for a strategy. It all depends how we close out the morning's trade, to be honest with you. I want to see whether or not this rally in the futures market is for real. So let's let everything simmer down until early afternoon. All right, so we're in a trading range here. One strategy that could be employed is waiting for a breakout above these two resistance marks at around 84.24. That's on a weekly basis. Daily chart. We broke daily support yesterday. It's hard to see here, but as a matter of fact, I'll take it off. Note how this is solid green. You can hardly see behind it a dashed line. So, and what that's illustrating, I'm going to take the daily trend line off, and you see just a dashed line. There you have it. What that's illustrating is weekly resistance above. Let's throw them back. So what I want to know is when we close above this both daily and weekly resistance level, because that would be an interesting entry point. And we'll keep this active for a few days. The relative strength on Square has been outstanding versus the rest of the market. It can't be ignored. And we'll leave off with Amazon. Monthly chart. We shorted it up here. Made a nice profit, but we covered too soon. So we continue to flirt with the upper band of resistance at around just shy of 2,000 to 2,000 mark. Weekly chart, now looking good. A rejection at resistance. No compelling reason to step in here. Daily chart. Very close to an outside reversal bar yesterday. Again, no compelling reason to get involved with Amazon to the long side or to the short side, to be honest. If we manage to close above this resistance level here at 1995, and the market is holding up, the market is rallying, then Amazon maybe a buy for a very short-term swing trade, in and out, a couple of days max. Okay, and we're good to go. All right, and with that, folks, I'm going to take a quick peek back at gold and the S&P 500 on a 4-hour basis. Let's see where we're leaving off here. See if we're holding our morning gains. Not much in terms of change since we last looked. Still up about 2%. Gold has rallied off the lows of the session, and we continue to form an inverted head and shoulder setup here. Again, left shoulder, head, right shoulder. Here's your neckline. At 16, let's call it 1657 on spot gold. And with that, folks, everybody have a profitable trading day. Allow these markets, please, to settle down. Don't get lured in. Let them settle down. Let's see if this morning's future spike is, in fact, for real, or is it a head fake? Are they trying to bait the little guy into the market? Let's not fall victim to that emotion. And always remember, it doesn't matter where we trade intraday. What matters is where we close. So everybody have a profitable trading day and be well.